go across to our colleague Poonam Sani, who joins in with a quick run through on what to expect from Axis Bank's earnings. Poonam.
Tanvi, two contrasting earnings during today. Axis Bank would see a very, very poor performance. That's the expectation, and Yes Bank would be relatively far better. Firstly, in terms of Axis Bank, it's likely to report a profit degrowth of over 50%. The profit estimates are very, very wide, 170 crore to 1,200 odd crores. So we really need to be watchful of that. But do know that there are two reasons why we should be seeing a huge amount of pressure on the profits. One, on account of elevated slippages and hence elevated NPA provisions. Secondly, there's also an impact of higher base. So both these factors would be tending to pull the profit lower. NIMs may be likely also under pressure during this quarter. And most importantly, impact in terms of the February 2018 circular would be fairly important. Management commentary on the same. Overall, on the positive end, we should be seeing a better loan growth of anywhere around 17 to 19%. But how would the management be dealing with the entire lower rated corporate book, and the growth in that would also be fairly important. Fee income growth is likely to be healthy. Besides the entire asset quality focus, we should also be, of course, focusing in terms of the management commentary on the succession plan, and who could be and any commentary on the same would be definitely important on further clarity on the stock. Yes Bank, on the other hand, would be reporting 1065 crore of profit, a growth of 17 odd % on the profitability versus an NII growth of 24 odd %. So we should again be seeing higher NPA provisions for Yes Bank, but the impact of February 2018 circular, as per the management, is going to be slightly limited. So watch out for that. Margins again more or less stable on a QoQ basis. Healthy fee income. They have been growing the book aggressively. Over 33% growth is likely on that front. Management commentary on the entire book as well as the entire exposure to the sensitive sector would be fairly important. Another point is that management has already recently raised capital, but they are again seeking a board approval for capital raising in FY19. Just a clarification on that front would be fairly important, but otherwise good results from Yes Bank, but weak numbers from Axis Bank.
Okay, we'll leave it at that. And I guess the reappointment of Rana Kapoor, the street would be eyeing out whether or not Yes Bank, aside of their capital raising plans, has any announcement to make material announcement rather on Rana Kapoor's reappointment. So that's something that the street would be looking out for. But let's take this discussion forward on what we should expect from Axis as well as Yes Bank. We've got on board with us Kunal Shah from Edelweiss Capital joining in on the show right now. Kunal, hi, morning. Two key earnings today, Axis and Yes. Do you see both these reporting significantly divergent to performance? Because from Axis, we're not expecting such a healthy set, and Yes Bank, we're expecting strong numbers.
Yeah, hi, morning. As you said, two corporate lenders would be reporting the earnings. That is how the earnings season is actually kick-starting. Between Axis and Yes, definitely there would be divergence in terms of the performance, and this would be particularly with respect to the overall growth as well as asset quality. So for Axis, given that they have a relatively higher proportion of the stress pool, excluding the GNPLs, we would see some recognition happening in this quarter, which could lead to higher provisioning. While for Yes, the stress pool excluding GNPL is not so high, and I think their slippages as well as credit cost should be much more contained. So that's the reason maybe even at the NII level as well as even at the PAT level, we would see better performance from Yes Bank as compared to that of Axis.
But between the two, as a house view, where do you see there being greater conviction building in terms of what they report as far as the asset quality is concerned? More importantly, the management of, the bad loan situation.
Yeah, so more conviction is definitely with Yes, and we have seen it over the past several quarters in terms of the overall stress pool as well. If we see their GNPLs is still lesser than 2 odd %, and in terms of the earnings growth trajectory for Yes Bank, that's been much better as compared to that of Axis. So I maybe in terms of our conviction and in terms of our target price as well, Yes Bank would be a preferred pick amongst the entire banking sector industry, and we have a hold recommendation on Axis.
Okay. And this whole leadership transition at Axis Bank, how do you see that unfolding?
Yeah, so as it has been highlighted by the management as well, in fact, board has appointed the agency in order to look out, say, for the top management position out there. So definitely the search is on, and we should get at least some clarity towards the end of this calendar when, say, Ms. Shikha Sharma is expected to retire. So maybe the search is on, and definitely there would be a change for sure with this entire thing from coming in from the RBI.
Okay. Tell me about Yes Bank, because that's likely to see a lower impact of Feb 2018 circular by the RBI. By how much do you see the NPAs and provisioning rise for Yes Bank in the fourth quarter and over the next half of the fiscal too?
So for fourth quarter, we still expect that their GNPLs should be sub 2%. They were 1.7 in the Q3 of FY18. And in terms of the provisioning, last time it was 420 odd crores in Q3. We are expecting it to be ranging somewhere between 470 to 500 odd crores of provisioning. So when you look at year on year in Q4 of FY17, their provisioning was 300 odd crores, and now it would be somewhere around 470 to 500 odd crores. So in terms of the percentage terms, it would still be like 55-60% increase in the provisioning. But when we look at it in terms of the overall credit cost, that would be much better as compared to that of the other corporate lenders. So when we look at the overall net interest income level, we are expecting more than 25% earnings growth in Q4. And at the operating profit level, we are expecting around about 25% growth. But coming to the PAT, our expectation is almost 20% growth because on a year on a relatively lower base last fiscal in Q4, you will still see maybe a slightly uptick in terms of the provisioning. So, but still PAT growth of 10% even in this environment will be much better as compared to that of the other corporate lenders.
Okay. What about, all that talk about fundraising at Yes Bank? As an analyst, more dilution is always not seen as good news. But do you see that as just a part of the business where they will continue to look at recapitalizing?
So in terms of the growth, Yes Bank is growing at a much higher pace than the industry. In fact, this quarter as well, we are expecting more than 35% loan growth for them. And their overall ROEs would still be somewhere around 20-22% over next 2 years. So there is some consumption of a capital if they continue to grow at say almost 3x more than 3x the industry average. But particularly with respect to the capital, seeing that they had done the equity raising just maybe a few quarters back. So I don't think this is more of an enabling resolution. It's not going to come in the near term for sure. I think even if it happens, it's still like 3-4 quarters away for them. So nothing in the near term, next 6 months to 9 months, definitely I don't see any kind of equity raising in this stock.
So as of now, given the underperformance in Axis and the outperformance in Yes Bank, if the numbers do come as per the market expectations and is an inline set, what's your call and rating on both the stocks?
So Axis, again, it is expected that slippages would be elevated, even credit cost would be high, and to that extent, when you look at it overall in terms of earnings, people are expecting a decline Q on Q as well as year on year. So that's largely there into the expectations as well. The only thing is it should not disappoint a lot in terms of the expectation of the slippage number. If that happens, then I think stock could react negatively, and if it is like too positive even on the slippages, which might not be the case ideally, then maybe the stock could react on the positive side as well. But given the overall stress pool which is still lying with excess of say almost 18,000 odd crores, even if there is a upfront recognition, the provisioning would still continue for them for another 2 odd quarters, and definitely there would be uncertainty with respect to the management as well as to who is coming at the top. So to that extent, the underperformance on Axis could continue, and we have, as I highlighted earlier, we have a hold recommendation. And for yes, again there are two schools of thoughts. People are expecting slightly negative number as well because of maybe RBI's divergence which got reported earlier, and they are saying like maybe Q4 Yes Bank would be slightly conservative in terms of recognition as well. While maybe when we look at last 3-4 quarters of the performance and the underlying quality of the lending which they had done, I don't think there would be any disappointment. In fact, our expectation in terms of their PAT is higher than the consensus. We are expecting 1,090 to 1,100 crores of PAT for them in Q4. So if it comes, definitely what we are expecting, stock should react positively, and we had seen some kind of a build up in the stock over last 3-4 days as well. But structurally still, when we look at it, since Yes Bank would be able to deliver more than 20% ROEs, and the valuations wherein trading, wherein it is trading at today, we see much higher upside in case of Yes Bank as compared to that of Axis.
We'll leave it at that. Thanks, Kunal, for taking us through that analysis on the earnings of Axis Bank and Yes Bank. Important numbers, key for the markets.